Gagan, thank you so much for joining in. Just to quickly recap, you've had the government panel, which has submitted the audit report of Reliance Industries and KN India block packs, and they've suggested that Oil Ministry should approve the Reliance Industries D6 budget, and they also should allow them to recover $161 million in cost. What's your reading of these two?
I think that what their understanding was that the budget should be approved at the start of the season. So that's I think they already indicated in their previous audit also on the KG of the Reliance, and also similar for the KN India. So basically, thing is that if the budget is approved at the start of the year, so its monitoring can be very easy. So that is the purpose that I think it's really good indication that if it will be followed by the government in the future, so that gives the expedition of the many upstream projects. So that's what I take on this statement.
Stay with us, Gagan. Let's also bring on board Piyush Jain, equity research analyst at Morningstar. And Piyush, clearly a shot in the arm for Reliance Industries. What do you make of them suggesting the oilmen allow RIL recover $160.8 million in cost? What kind of financial implications would this particular figure have?
Still uncertain, as you know. There will be quite exchange of that, legal exchanges on that. But I think we already actually incorporated a lot of legal liabilities at present. Already stock is seeing a lot of overhang because of lower production and a very high uncertainty on the amount of revenue they're going to get from it. But I do not see at present, in the very near term, a clear impact on the stock, because these things normally take a lot of time, and at present it's not clear that RL will really actually have to suffer that kind of damage.
You know, Reliance Industries has been saying for a while now that there have been unanticipated delays at the KG-D6 block, things that have not been under their control. And they've also said how that has led to escalation of costs. But now the government panel, which had been constituted itself, is saying that the oil ministry should act to increase the KG-D6 output. What sort of measures do you think we could see the government take to ensure that the D6 output is back on track? Piyush?
I think the first thing which was being required was to actually give approvals, very speedy approvals to drill more wells. That was something which was in a limbo for the last 2-3 years, because for increasing the output, you need to drill more wells. So actually to increase the output and also connect the wells to the infrastructure. I think that was being given. But now I think, and because November to April is the window when actually you are able to do the work in the KG-D6. And only after that, basically, you'll be able to see what kind of improvement is coming. So far, what we know is that we're not able to see very great or very impactful improvement at present. So probably any development which you're going to see will come after April. That is number one. Number two is, so well, approval has been given something. But I think second thing is, as we know, a lot of legal liabilities, a lot of to and fro exchange on the claims. So I think we should see amount of certainty over the entire claims part. All the parties, including the government, should have a very clear certainty about what kind of financial obligations or financial revenue all parties are going to get. So I think once we start getting certainty around that, I think everybody will have incentive to invest more, to increase the capex. Because if you have a lot of financial obligation and uncertainty around the revenue, around the cost, around the gas price, then there is less incentive for the operators to invest in the future capex.
One second, Piyush, just stay with us. Gagan, I would like to ask from you, Reliance Industries is the most underperforming stock, not only of the index, but from the oil sector as well. Last 7 years underperformance. But now, with these kind of green shoots of resolution coming in, on the case like D6, do you think some of that underperformance may start reversing?
I think that this E&P is presently I think a smaller part of the Reliance in the overall scenario that the way it's going. I don't think that it's make any significant impact just from one of these decisions. And usually ENP takes the time for basically for all the get approved, and then the things. What's the clarity on the about the reserves and other things. And so usually I don't think that just purely based on the ENP thing, Reliance will run up. Yeah, definitely it will run up in 1 to 2 years down the line, because there are other factors like petrochemicals commissioning, and then there's the refining coke to gas plant, and also the retail business growth. Reliance Jio. So these are the triggers, other triggers that will drive. But ENP, I think it's not the key factor. Just like I think 3 years back when ENP was the determining factor for the Reliance volatility. So, but I think it's getting that volatility for the ENP is getting reduced going forward.
Piyush and Gagan, gentlemen, stay with us. We have another big voice on the sector joining us. Ex-Oil Secretary Mr. Tripathi also joins us. Mr. Tripathi, you've been seeing the developments over the last couple of years. The CAG audited the expenditure between 09 and 012 and found discrepancies and made a report and brought it to the notice, and then this entire court case stretched. But now with the actual CAG report, when being tabled at the Parliament, says that they should be allowed to charge the $160 million expenditure which they have incurred on some of the wells which are not really part of the PSC. Do you think some kind of a resolution, one step forward by the CAG, probably Reliance would also respond in the same manner, and this massive issue about KG-D6 gradually coming to a resolution now?
Yes, in the beginning there was a lot of apprehension about CNAG auditing these PPP projects, and particularly the private sector was not very familiar with CNAG system of audit, and CNAG were also not very familiar with the private sector method of working. So they were nitpicking and picking up small matters like why there was a single tender and there was no pre-qualification, or there was no ICB, and how the parties were selected, etc. So the major issues got lost in that. So if now the CNAG has taken a view that the major issues should be examined, and these smaller and nitpicking jobs should not be really their focus, that's a very welcome development. And I think this will also encourage other PPP operators not to feel scared of CNAG audit, because we need to have many more PPP projects, whether in oil sector or in other infrastructure sector. So it's a mutual learning for both private operators as well as CAG team. And if they have allowed $1.68 billion cost recovery, that is what our Reliance were all the time pressing for, then I think it's a resolution of the matter, and one should now move ahead. As CAG says, that the gas production, which has come to a very low level, there should be resolution of that also, how to go about it. So I think on the whole, it's a very welcome development.
Mr. Tripathi, let me correct you. It's not 1.68 billion, it's $160 million, which is also a part of the entire expenditure done, but the larger amount, which is $450 million, which also they say that they claimed that it was used in exploration and CAG was against it. But never mind. But how do you really see it go from here on? Because Piyush and Gagan, who were the analysts on the show earlier, were saying that it's a good sentimental positive, but it will really take time for Reliance to actually start improving gas flows from the KG-D6 basin. So how do you react to that particular argument?
Well, yes, it would, because, there is a long gestation period in all these matters. And first the development plan has to be prepared, then it has to be approved, and then the procurement of various equipments has to begin, and then their installation in deep sea. All these things take time. So it's a fact that now if the development plan is approved and the costs are approved, then they can start work. But it will take time. It will take anything between 1 year to 2 years, not earlier than that.
Mr. Tripathi, just a sec, let me just take a reaction from Gagan once again, because the stock is making fresh highs for intraday basis, about 2.5% higher versus the kind of 0.5% losses it was trading at. Gagan, do you think it will be early for the analyst community to start reworking the numbers, mainly because of the commentary coming in from the CAG report?
I think I already factored in the 4 TCF reserves. Reserves development in future for at around $6 to $7 gas price. For production should start from 3 to 4 years down the line at 20 MMCMD. So that already factored in my valuation. My target price is around 1,200 rupees. So yeah, how the market react, that is the thing need to be watched. That if they get the approval, most of the things that the way this oil ministry is also indicating that they want to expedite the upstream projects. So if this is just the indication precursor, that so definitely it's a stock can approach its the fair value that I expect, but still I think that it's not just a few weeks process. It usually takes a long time, and I doubt that whether the closure of this fair weather window, prior to the monsoon, if they will start any work or anything to expedite the things. So the possibility is that basically we have to wait at least 6 to 12 months to get further final clarity of the development plan.
Right. Gagan, stay with us. Mr. Tripathi, I wanted to ask you a question which may be slightly, have a political shade to it. You've been in the government. Past 1 week, earlier the news came that the government is not planning to challenge the case, the Vodafone and Shell type of cases, or re-challenge it to the court. Now, another resolution seemed to be coming out of the contents of the CAG report. Do you think that ever since this to challenge, taken office, the large litigation related to the big corporates is gradually moving towards resolution?
Yeah, I think so, and I think I welcome that, and I think that is the way to go about. The government should not behave like a disgruntled loser. After all, in all these matters, if the concerned regulatory authority or the concerned court has given a decision and that goes against the government should accept it in a generous manner and should not go about changing the law and not go about again, challenging unnecessarily where only the lawyers win and the country then loses. So I think there should be finality in these matters, and there should be the certainty also of the various regulations, and it's a happy augury.
Mr. Tripathi, ahead of the new round of NELP also will be going on stream in a matter of months. Do you think that this will go down as a relatively good precursor? The message going out to the international oil and gas community that sure the past was a little patchy between the large explorer and the government, but perhaps going forward under the new government's reign, production sharing contracts will have less ambiguity leading to this kind of litigation, and hence it will be positive, expected in the NELP round as well.
Yeah, I think so, because the last few NELP rounds, the various explorers, they were not certain about what the production sharing meant and what the auditing by CAG meant and how the cost recovery would really work in practice. So now that this case has gone through the full distance, they have all the details available. So I think it brings more certainty and removes the ambiguity, and they should come forward and bid more aggressively now.
Piyush, you also look at the international oil and gas space very closely, and the way RIL was underperforming Indian market and Indian oil sector. Do you think that now with this kind of a resolution moving towards the KG-D6 basin, big investors will start taking a relook at RIL?
No, I don't think so. So the first answer is too soon. The reasons are quite simple. The RIL underperformance is primarily because of very low returns on the cash flow utilization at present. So if you look at the businesses they are operating in, petrochemicals, refining, it's oversupplied. So that's why they are not able to make the margins which they were making 7 to 8 years back, primarily because of the industry cycle. So capacity is high at present, over capacity. Then you look at oil and gas, it's a slightly smaller proportion of the overall business, but there also the Indian gas business has not performed to their expectations. Geologies don't turn around overnight. They will take a couple of quarters, and by couple of quarters, I mean 8 to 10 quarters. So,
all right. Right, Piyush, I'll let you go on this juncture. Thanks a lot for joining us. Gagan, very quickly, any last closing comments, and what else would you like to hear from the entire report which is tabled and only the initial trickles have come so far?
What I think is that basically now this panel is also working in line that how to expedite the upstream project and remove the inefficiencies. So basically the focus is on that budget should be approved in prior basis and these things. So these are just the indication that because earlier what we see that 1 or 2 years pass, then the budget gets approval, then many times the problem arises. So these type I just want to avoid. So that will be the good indication that about the overall health of the upstream industry going forward.
All right, Gagan, we'll let you go on that one. Thanks a lot for joining us. Another veteran of the energy sector joins us, Mr. Narendra Taneja. He's also incidentally heading the energy cell of the BJP. Mr. Taneja, good afternoon. Thanks a lot for joining us. So what do you make of the change in stance of CAG when they are actually tabling their report in the parliament? The initial commentary seems to be not as negative or against RIL as it was, we had been reading about so far, and they even go on to say that RIL can be allowed $160 million worth of expenditure which they have incurred.
I think, in what has happened in the meantime, they've consulted some external consultants, including consultants, who are very well known in the international oil and gas industry. So they probably had come up with something which is a little bit more authentic than before, and maybe that CAG is now better informed and probably is better qualified in terms of expertise, and that's why they probably have come up with this thing. The people who know of things, who know the technical issues, and technical matters, they had in disagreement with the CAG in the past. So probably I would look at the whole thing as a bit of a correction based on the new input and the new information and the new expertise support that CAG has received both domestically and also from overseas.
The two contentious amounts were $160 million expenditure on a couple of fields which they were not awarded, which now CAG said that they can go ahead and recover, and the other was the $450 or $460 million amount other than that, which also was kind of escalated. The cost got escalated. Do you think now that the commentary for one is turning positive, probably the other bigger amount also they may be allowed to recover from the overall profits?
You see, those information, by CAG, as you know, in the oil and gas industry, people were in serious disagreement with them. Because according to the industry, that was not based on authentic information and authentic understanding and the real understanding of how the industry functions. So I would look at the whole exercise now or the new report more as a bit of kind of based on the best information, the best expertise that probably they have outsourced, and based on that. Because, in such, sectors like oil and gas exploration production, it's not as easy as, for instance, CAG had suggested, to gold plate and to exaggerate and to do all those kind of things. Because this is a highly complex industry which is based 99% of the job is done by external contractors. Many of them highly respected names in different parts of the world, mostly developed countries, where transparency is basically taken for granted almost. So I think, this is more kind of, I would say, a correction, and overall is going to send good message, in the industry circles.
Right, Mr. Taneja, we'll let you go on that one. Thanks a lot for accommodating, chatting up with us today. Mr. Tripathi, you're also waiting by patiently. Just one last quick question with you. In the roadshows for ONGC, FPO are also on, and with issues like such difficult issues also moving towards some kind of a resolution, do you think the other important issue of subsidy sharing for upstream companies could also be taken up before the share sale actually hits the market? Do you think government will bite on that one as well?
Just one word on Reliance before I go to ONGC. I think the total disputed amount was in the range of $1.6 to $1.7 billion. So since I don't know what the CAG report says, if you say 160 million is what has been resolved and 450 million is the other part, I think the total will come to 1.6 or 1.7 billion. So maybe there will be some other reports which will come. But since the process has started and CAG has begun to understand how the private sector operates, so maybe, the major part will be resolved. Now, coming to ONGC and subsidy sharing, yes, ONGC's realization was $100 or $100 plus per barrel was the price of crude oil. The actual net realization came to about $55 or $60 because they were giving subsidy. Now, the price is also coming down. So in ONGC, on one hand, the price comes down, but on the other hand, the subsidy burden will not be there. So, both calculations will have to be made. And I think ONGC, the profitability will continue to be what it was, maybe slightly more, if the oil prices are in the range of $80 or $80 plus, and subsidy burden is removed. So ONGC should be doing better, and the oil marketing companies, refining companies should also improve.
Okay, Mr. Tripathi, on that point, we'll let you go. Thanks a lot for chatting up with us today on this important piece of news. With that, guys, back to you, Megha. So market overall also got a big, leg up with that 2.5% kind of a up move in RL today.
Absolutely. In fact, I think we are at 2-month highs as far as Reliance Industries is concerned, and firmly in the 4-digit territory for RIL at 1,013.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.